What's up, guys? It's Michael here. Now, for those that know me or have been following me here on YouTube for a while now, you're well aware that Stephan is one of the YouTubers that I follow and really enjoy their content. Graham is someone that actually inspired me to start creating content here on YouTube as well. I certainly admire his accomplishments to this point, and what I really love about him and what I personally connect with Graham on, in my opinion at least, is that he built his original foundation through real estate, both as a real estate agent and, more importantly, in my opinion, as an investor. So to see Graham post about a week ago that he has stopped investing in real estate and list out a bunch of reasons why, I was certainly curious and had to click on the video, as I do most of his videos, so I went and checked it out. So what I'd like to do here is briefly review the video that Graham did on why he stopped investing in real estate, discuss his reasoning, and then my opinion on the matter. And of course, for Graham's sake, if you guys don't mind, smash the like button below. It really helps little YouTubers like myself. Now, Graham has several great points early on in this video. One that really stands out to me, which truly does make sense, is that interest rates are at all-time historical lows, making it literally almost free money to borrow over the long term when you factor in inflation. Now, while this is a good thing at first glance for many investors or first-time homebuyers, it does put an upward pressure on the demand for houses because the cheaper money is, the more people are going to want to both invest in real estate and buy homes for the first time. Now, with that increase in demand comes an increase in housing prices due to competition. Houses start to sell at a premium, and then when new houses go on the market and they're appraised, they're compared to local comps in the area that recently sold. So as housing prices continue to creep up, new appraisals are also going to continue to creep up. Now, from the investor perspective, as housing prices creep up, if rent does not continue to creep up to keep up with the upward pressure on the housing price, what that does is it diminishes your ROI, or in other words, your return on investment. Now, in investing in traditional long-term rental properties, this is bad news. This makes finding a good deal, let alone a great deal, much more difficult. So this is going to create a much more tedious process to find that home run of a deal that's going to produce the amount of return that you're seeking. So for someone like Stephan, who's seen his wealth grow dramatically over the past few years, mainly due to his growth in YouTube, affiliate marketing, and courses online, it makes his time much more valuable. So I completely understand from Graham's perspective where he could be spending hours, if not weeks throughout the year, hunting to find that one good deal that he can get at a discount, fix up and rent out at a premium to still make whatever return he's looking for from a real estate investment perspective, whereas he could spend that same amount of time creating YouTube content where he's getting anywhere from $5,000 to upwards of $20,000 per YouTube episode he puts out. So when you think about it in that light, it really doesn't make sense for someone like Graham to be putting that many hours into hunting for that one real estate deal, especially if it's a smaller single-family home or a duplex that he plans to rent out. Now, something that I did find interesting was that Graham is putting a vast majority of his money right now into index funds because he's looking to capture the overall market, which I totally understand. But he and I both know that if he finds the right real estate deals, he can receive a much higher return on a cash perspective, and once you factor in principal paydown and appreciation over the long term, than he would ordinarily in the stock market. But for him, it sounds like he's looking for a much more passive form of investment and just to let his money sit in the market and compound over time while he focuses on other areas of his life, such as YouTube and building out new business ventures. When I started to think about it a little more, I started to think if Graham has that much money but not the time, why doesn't he build out a team that could actually do the hunting for some of the larger real estate deals, whether it's multifamily, large apartment complexes, or even commercial real estate, to where it can be more passive for him and he could just be an investor, let other people do the hunting and the operations for him and let him collect the money on the back end. But now when I started to think further into it, once you factor in, paying other people to do some of the tedious work or their operational work for you, your returns do diminish slightly because again, you're not using your time to do all those things. So you're paying someone else to do it for you. So when you factor in those expenses, it might make most sense just to let his money sit in the stock market and grow over time. To recap Graham's video, I think it is probably smart of him to not focus on some of those smaller real estate deals at this point. He's making far too much money, not just on YouTube, but he's making several hundred thousands of dollars per year from affiliate marketing, selling a few online courses, among other things. So when you think about it from a return on your time, I totally understand where he's coming from. Now, if it were me and I had that sum of money like Graham does and I didn't want to do a traditional long-term rental, what I would do is invest in short-term vacation rentals because the cash flow and cash-on-cash return potential is significantly higher than traditional long-term rentals in the vast majority of cases. In fact, my wife and I have invested in only 3 properties in the past year, and those 3 properties have set us financially free. So if I were Graham, I still would probably continue to invest in real estate from that aspect to where you can maximize the ROI of the deal by investing in short-term rentals instead of the traditional long-term rentals. There is much more wiggle room when it comes to short-term rentals because your cash flow potential is so much higher. You are able to pay a premium for a property and still meet the returns that you're seeking. And for those not familiar with how short-term rentals compare to traditional long-term rentals, let me just give you a brief example from the first ever property that we invested in. It was a 4-bedroom house we bought new for $495,000 here on the east side of Nashville. Now, if we were to do a traditional long-term rental, the max we would probably rent it out for is $3,000 to $3,500 per month. When you factor in our debt service to the bank and all our operational costs and paying a property manager, our return would be very minimal throughout the year. And honestly, we would probably only see a few $100s of cash flow per month. And for most traditional real estate investors investing in long-term rentals, that may be a good return. We ultimately opted to list this place as a short-term rental instead because we believe the cash flow potential was much higher. Now, we're in the first week of January of 2021, and we already have bookings or pre-bookings for the entire year exceeding $50,000. And what's crazy about that is we still have over 300 nights available to book. And we're forecasted to do around $100,000 for the year in revenue, and that equates to around $8,333.33 per month, which beats out the traditional long-term rental by around $5,000 per month in revenue potential. Now, I know what some of you may be thinking. Your operational expenses must be higher operating as an Airbnb as they would a traditional rental. Now, because our cash flow potential is so much higher as a short-term rental than it would be as a long-term rental, even though some of the operational expenses are higher, our cash flow each month far exceeds what it would be as a long-term rental. And I really like short-term rentals because even through economic downturns or market fluctuations, people are not going to stop going on vacation with their family. People are not going to stop getting married and going on bachelor and bachelorette parties. So I think there's opportunity to make money regardless of macroeconomic factors. So with that being said, I truly believe that the market demand for short-term rentals will be very strong throughout time. Now, if you guys want to see other videos of me talking about Airbnb properties and the specific numbers, how we furnish them, how we find them, all sorts of that good stuff, feel free to subscribe. I've had videos in the past detailing this information, and I will continue to make videos in the future detailing very similar investments as we acquire more properties. Additionally, I just created a Patreon account, which you guys are welcome to sign up for. It's a small monthly subscription, and I plan to share much more detailed information and almost group coaching-like settings. So I plan to post videos there every single month and maybe even do some live streams as well where I can answer specific questions for others who are also interested in investing in short-term rentals. You can find the link to that below. And as always, feel free to drop comments below. I love hearing from you guys. Drop questions. I do my best to answer every single one of them. But I really appreciate you guys taking the time to watch today, and I hope to see you again sometime soon.